What is happening at the stock market now?
I think it's a very pertinent question which is in everybody's mind today. What's going on? I would say it is a culmination of so much of things that have been going on in the stock market for so many months, which suddenly sparked with the NSB, the finance transaction, which led to SEC taking some hard decisions and coming up with a set of rules. Now, if I go back, what is wrong in the stock market is lack of professionalism and the absence of proper governing structures in the institutional bodies, whether it is state institutions or for that matter broking companies, for that matter corporates. All over we have issues which resulted in this transaction, which was cancelled by the president. So, what I feel is when investors lose confidence and the trust in the market, they run away. They will look at alternative investment opportunities which will give a return rather than be in the stock market. So, that is what has happened today.
As you said that the confidence is low on the stock market here in Sri Lanka now. So, what can we do to rectify this situation?
I think most important thing is bringing back the confidence of the investor, so that everybody can have a fair return by investing in the stock market. Now, our valuations are very, very attractive. It's not the valuations that is wrong, it is the confidence issue. Now, to bring confidence, it has to be I would say a much more concerted effort, that is from the government itself, putting back the investors' trust that there will be fair play in state institutions, where there have been various acquisitions saying there is erosion of governance as well as the rules and policies that they follow when they make investments. Now, we have seen the market suddenly not the state institution no longer active in the market is after NSB fiasco. Neither EPF, ETF or SLIC or NSB all are now out of the market. So, that is also going to hurt the market also. So, what we know is that there is proper investment policies in these institutions. I myself developed the NSB investment policy statement and handed over free of charge as a a professional body. We thought they need something like that, but they are not following those rules. The same thing with EPF. We know there is an investment policy statement. Now, if you follow those rules and regulations, there is a process where there is an investment committee who makes the decisions based on true fundamental value of what they buy and sell, and whether even if it is a strategic stake, yes, you may have to pay a premium to buy it, but there is a process and there is a proper approval scheme where you put it to certain high authority, ultimately get approval and do it with transparency.
Yeah. Now, if it means that still we need to instill proper governance and transparency mechanisms to those institutions as well as the stock market intermediaries.
Both. Yeah. You see, you can't do it to one side. You have to make sure all institutions follow proper procedures. Then the same thing has to be there in the broking industry. They also need to make sure that when there is conflicts of interest, they keep away from those conflicts of interest. They have to make sure there is proper code of conduct which applies to all the investment advisors, where when they see a conflict, they refrain from doing it, and they know the consequences of doing something wrong. Committing offense should be expensive. If it is not, everybody will do it and get away with it, and what's there to be lost?
Yeah, it means our rules are not strong enough for
well, several factors. Maybe the rules are difficult to enforce, but I think irrespective of the rules, I think what is lacking more is surveillance. You have to detect people who violate and bring enforcement. Now, easiest enforcement is public disclosure. If SEC publish in the website who they have found reasonable wrongdoings,
naming and shaming.
Naming and shaming. You don't need to go to courts and spend 100 years fighting a case when you can easily publish those institutions that are violating rules. You can easily show who has not met the standards or not met certain regulatory requirements. Easy. So then you make sure that they comply very quickly.
Now, do you see that our market will be corrected?
Definitely markets gets corrected, because it's markets work on greed and fear, nothing else. So people get greedy when the markets keep going up, and everybody starts joining the bandwagon, thinking you can make a lot of money. At some point, it turns. Then the fear comes in. Now we have this classic theory: everybody is fearful of the market. You don't want to join the market, right? So the correct thing to do is, when everybody is greedy, you better be fearful. When everybody is fearful, you better be greedy. And automatically those people, smart investors, will come in when the valuations look so attractive. So it will turn.
Yeah, Mr. Abeysuriya, thank you very much.
Thank you.